Okay, so welcome everyone to this seminar. We are going to speak about advanced trading strategies. Okay, before I jump to the topic, what we are going to cover, what we are supposed to cover today is three things. Okay, so we will have to speak about the candlesticks, and we will speak about the technical indicator moving average and the RSI, mainly the moving averages. And then we're going to speak about the Fibonacci retracement. So before we go to these details of the candlesticks and technical indicators and Fibonacci retracement, would you guys please tell me that do you have experience in trading or you are still in the beginning of your trading journey or intermediate? How do you classify yourself as a trader? Beginner, intermediate, or advanced? Please let me know. Uh, Let me know. Okay, my voice is like underwater. Okay, let me do one thing. Is it better right now? Can you hear me better right now? Okay, thank you. Beginner to intermediate, beginner. I'm a beginner with no experience. All right. Okay. Intermediate, beginner with no. Okay, so I can see that, guys, you are almost beginner to intermediate. I didn't see any advanced level here in this beginner with little experience. That no worries at all. Because usually we will be speaking about an advanced trading strategies. It is not that advanced, like I would say it's not an advanced, but it requires some prior knowledge when it comes to this, right? So let me jump quickly to not wasting your time. Thank you so much. Okay, let me not waste your valuable time and let's start to get to know about the first topic, which is I'll speak about it, which is the candlesticks. So, guys, I want to ask you a question. When you open the chart, when you open the chart and you sit in front of the chart, what is the first thing that you see in the charts? Could you please tell me what trend? Candlesticks. Okay. Some people might say volume bar, okay? However, the market structure, it's not this. Once you open the any chart on the live, okay, if you opened any chart, the only thing that you can see on trading view, okay, by default is the candlesticks. If you open MT4, MT5, what you're gonna see? You are gonna see candlesticks. So the issue that comes here with the modern traders, people who are, are big fans of ICT, SMC, SB model, all of these, fancy jargons. When it comes to this, okay, they started to ignore what are the candlesticks tell you because they mainly focus ICT traders and SMC traders. They think about or they look at what we call it the market structures, trends, and order blocks, a lot of things. Okay, so they don't give an attention to what are the candlesticks are trying to tell you, right? So in order to understand how important is the candlesticks, okay, first we need to understand how the candlesticks are formed or what are the components of the candlesticks. So candlesticks, we have two type of candlesticks, okay? So this is the bullish candle. This is the bullish candle. So the bullish candle, as you can see, it is, showing that the price is going up. Every candle, it represents the price that's happening in a certain period of time, right? So the candle here opened at this price, okay? So it opened at this level, let's say at $100, okay? And then the price continued to push high, and then the candle reached, for example, to this level, let's say $120. This is the high level. And then this is the close, let's say 110. and this is the lowest level of the candle, let's say $90, right? So this is the formation of the candle. So what is important for me right now, what is important for me is the wick. This is known as a wick. And this is known as what? This is known as the body of the candle. Okay. So as I mentioned for you, the bullish candle, when the price is tend to go higher, okay, because it opens at a lower price and then it closes at a higher price. So the prices go up. And this candle is actually, it is for the buyers. So if I want to know that who is in control, the buyers or the seller, you would like to check this candle. If this candle, it's like this bullish candle, green candle, it means that this candle is the buyers are in control. Okay? Yes, of course, 100%. Okay? This is number one. Now, the opposite exactly, it is the bearish candle. So the bearish candle, as you can see, we open. Okay, this is the opening price at this level. So we opened here. Okay, the price pushed higher to this level. Okay, and then sellers take the control again and they have reached the price to this level. Okay, and then there was some pullback from the buyers. So we closed here. Okay, so this is the wick of the candle. Okay, and this is the body of the candle, right? So we have this information given here. Now, why I am showing you this information, I think every one of you guys know this information, but it's really important to know how the candles is being formed when you are in a live trade. Okay, let's see. Okay, so I want to know how this bullish candle is being formed in the market. Okay, so it is composed of different, movements. These movements, once it happens, okay, and it's over, you are going to get this final candlesticks here. Okay, so this candlestick actually, it happens, it does not show a pair or show in the chart immediately like this, but there are some market movement that happens in order to bring to you this final look of the candle of bullish candlestick. So number one, what happens is that the price will start to go down. Okay, so as you can see here, the price is going down. So the sellers are taking the control. Now, the sellers are going to continue to take the control more and more, right? So we started, here, and then the sellers continue to take the control, right? And after that, the buyers took the control. So what we see on the chart is this wick, right? This wick is actually a representation of buying volume. So people are buying in the market, okay? So they are eating all what the sellers have been doing in the price. So the sellers are bringing the price down and the buyers are pushing the price up. So what is represented in the market? We show this on the chart as just a wick. This is how the wick is formed. And this is very important information for you because if the candle has a long wick, okay, it means that the buyers become very strong in the market, right? Okay, guys, do you have the same issue or my voice is clear? Clear. I think, Bilimani, I think you have the same, you have only the issue, okay? Okay, so, okay. So this is how the wick is being formed in the market. Now, what's going to happen next? That the buyers are going to continue pushing the price higher and higher and higher and higher, right? Until we reach it to this level. Now, once we reach to this level, the seller would like to participate, would like to bring the price down. So what they will do, they will start to sell. They will try to sell. So they will eat a portion of this candle. Okay, and this is going to be represented by the upper wick. And then the candle is going to close by this way, right? This is how the candlesticks are being formed. Okay, thank you, Christine. Okay, this is how the candlestick is being formed. Now, guys, is this clear for everyone how the bullish candle is being formed in the market? Now, what is the most important thing that you should understand from this slide? Okay, one thing that you should understand from this slide, guys, is that, okay, is that you do not or you cannot enter a trade without the candle being closed. So, because a lot of people, a lot of traders, once they see the candle started to open, okay, they see the price is going down, and then they see the price further going down. At that point of time, they decide to enter into a trade and take a sell position, right? They didn't wait the candle till it closed. If you would know that this entire selling pressure would flip to this candle, you would never would enter into a trade, right? So there is the most important thing why I am showing you this animation is just I want you to visualize that even if the candle started showing you at the early beginning selling pressure, the candle might close as a bullish candle and the buyers are in control, right? The same thing goes for the bearish candles. Now, the bearish candle, how it's being formed. Buyers are taking control at the early beginning. Buyers are coming to the market and taking more control. Now, the seller here will take the control and they will start to form this wick. And after that, the sellers are going to take the full control and reach the price to this level, right? And then the sellers will jump, trying to push the price a bit higher. Okay, so the lower wick is going to be formed by buyers, and then the candle is going to close by this way. So if you see this, happening at the early 5 minute or 10 minute or 15 minutes of your candle, and you decided to buy without the candle getting or closed, okay, so you cannot imagine that this candle might flip and actually close as a bearish candle. So it's very important, guys, to visualize how the candlesticks are going to close, right? Okay, so the pro tip, okay, helpful tips. Never take a trade if the candle is open. Wait until the candle closes. Is that clear, everyone? Is that clear? All good? Okay, that's super. Now, let's see the trends in the candlesticks. Okay, let's see the trends. Which time frame? Any time frame. Any time frame. This happens on the daily time frame, on the 4 hours, in the 1 hour, in the 30 minute, in the 15 minutes, all time frames. It happens. Okay? The formation of the candlesticks take the same thing, same process that I showed to you on any time frame, right? Now, let me show you the candlesticks trends. Okay, so guys, before I explain the candlesticks trends, I want to explain something which is the trends. Okay, so what are the trends? Okay, the market is just moving into two type of trends. Okay, so either we have an uptrend. Okay, so the market might be in an uptrend, right? Or the market can be in a downtrend. These are the two type of trends or the two trends that we have in the market. Otherwise, we are going to describe the market as a flat and the market is just consolidating or moving on a sideway. Okay. Now, what is happening on the uptrend? What is happening on the uptrend? So, on the uptrend, okay, we know that, okay, in the ideal, life, ideal scenario, the price is moving like this. Higher highs, higher lows, higher highs, and higher lows. So you can see here, we have the high. This high is being broken. There is another higher high. This high is being broken, and so on and so forth, right? So, okay, okay. Now, so this is what's happening on the high and high lows, right? In the upside, high, low, high, low, high, low. So this is not what we want to see on the chart. Now, in the downtrend, on the downtrend, what we can see, it's exactly the opposite. Now the price is moving like this. So we have a high and here we have a low. Now this low is going to be broken and there is a lower low. This low is going to be broken and there is a lower low, and so on and so forth. So if this happens in front of you, so this suggests that there is a price continuation in the uptrend or in the downtrend. Now, the candlesticks themselves, they have a trend. Okay? So what is the trends in the candlesticks? See, guys, let's talk about the uptrend in the candlesticks. Let's speak about the uptrend in the candlesticks. So what we can see here. Now, let's assume that I have this candle. So I have a bullish candle in front of me, and this candle has closed, right? So in order to make sure that the price is going to continue in the uptrend, remember that I just told you in the uptrend, okay, we must create a new high, right? So there is a high, we must create a new high. So as you can see, this is the high of the candle, right? So the next candle should respect the high of this candle because if the candle started to move down, okay, so this high is not broken, which represent a downtrend, right? So now the second candle can make another what? Another high. So there is a higher high, right? For the second candle. Now I can see this line is the high of the next candle. So, okay, the third candle should respect the high of this candle. And it shouldn't break below this level. It should be higher than what? Higher than this level. And so on and so forth. So as you can see, in order to make sure that the market is going to head to, a new highs, okay, the candlesticks should respect the high of the previous candle, right? Is that clear for everyone? All good? Because I'm gonna show you a trade. I took it on the London session. Okay. Okay. Based on this concept, right? Now, for the downtrend, on the downtrend, we have a bearish candle. So this is the low of the bearish candle. Now this low must be broken and we create another or a new low. So as you can see, okay, this low have been broken and we creating another what? Another low. So the new candle cannot, if it didn't respect the low of this candle, it means that the price might flip to bullish, okay? But as you can see here, the price goes here, and then the sellers started to take the control. We respect the low of the previous candle, which means a continuation of the downtrend, okay? But is it possible the next candlestick has a close below the previous higher? Okay, which candlesticks? You're speaking about the downtrend and the uptrend. So in the uptrend, is it possible to the next candlestick has a close below the previous high? Okay, so you mean like this candle? Let's assume what we have a candle. Okay, it can close like this, right? It might happen. Okay, but if this candle, I'm not sure whether this is what you're asking about or not, but if the candle closed bullish, okay, it should be respecting the high of the previous candle. Because if this didn't happen, because this is the opening price, okay? If the price started to go down and the candle closed bearish candle, like this. So as you can see, this high was not respected. So the candle closed bullish. So I'm expecting the price to continue going down. All right. Okay. Now, a very important information that you should know when it comes to candlesticks. Okay. Which is what? The candlesticks that close without candlesticks without a wick at close. Now, before I jump to this, okay, so I took a trade on the London session, okay, based on the concept of the candlesticks. I just trade candlesticks, support and resistance. So as you can see here, I was like just planning my trade. I put these numbers, okay, so this was my support zone. This was my resistance zone. Okay. And I said that if the price was here, if I see a candle closes below this range, okay, the price will continue push down. In order to get more confirmation, I went to the lower time frame, which is 15 minutes. Okay. I saw this candle closed below the support level. And as you can see here, the the next candle respected the low of the previous candle. And the third candle respected the low of the previous candle. And this candle, okay, respected the low, but the body was so weak. So which means that the trend is over right now. Okay. Now, as you can see here, the price has started to flip. But why did I enter to this trade? Actually, I had two confirmation here. Number one is that there was here, as you can see, there was here a support level, right? This support level has been broken by this candle. Okay, this is number one. This is the first confirmation that I got that sellers now are in control, right? So as you can see, the candle has break the support level. Number two, the candle has opened without a wick on the top. As you can see, there is no wick on the top, nothing on the top. So what does this actually mean? What does this actually mean when a bearish candle opens without a wick at the top? Okay, this is what I want to explain here, guys, right? So if I found a candle that opened without a wick, this means what? The wick happens in the bearish candle when the price starts to go up first and then goes down. Now imagine how powerful are the sellers that they couldn't even allow the buyers to bring the price higher. They didn't allow them to bring the price higher, and then they take the control and then we push down. Okay, so initially, this candle started without a wick at the top, which means what? Which means very high selling pressure. Which means what? very high selling pressure. Exactly, Rachel. So there is no up pressure. There is no buyers. The buyers are so weak compared to the candle has closed the previous the support level, and closed below this level. Okay, as you can see, I was just highlighting my the areas, and then I took the trade roughly from this point. Okay, and it continues to this level. So I just prepared everything. I said it is a potential sell level. So as you can see here. Okay, this was the trade. I took it today. Okay, so as you can see here, it was this one from 4,925 till 4,917. Okay, so I took the trade from 4,925. Okay, so where is 4,925? Here, exactly this level. Okay, exactly this level. When the price this candle started to respect the low of the previous candle and we started to push down, I took the trade and I planned to close it here. You know why I close it here? Because of this rejection. As you can see here, there is a huge rejection happening here. So I said this is the maximum, and actually it has a take profit to this level, right? What time scale am I using? I'm using 15-minute chart. Okay, so I usually open the 30-minute chart and then I use as a confirmation, okay, 15-minute chart. So I saw a break below the support level, a candle opened without a wick, give me another confirmation, high selling pressure. I took exactly the sell. I opened the position 4,925 until this level, which is 4,910. Okay, so can you imagine this is a 16 pip range, right? Which is something good. All right. So this, guys, is something very important. You need to respect the candles. You respect the candlesticks. Read about the candlestick. The same thing goes here. If the candle has opened without a wick at the bottom, bullish candle, this means that the price, there is a high probability, that the price is going to continue to push higher and higher and higher. So whenever you see a candle like this, okay, there is a high probability, not 100%, there is a high probability that the price is going to continue to move up. If you see a candle opened without a wick like this, bearish candle, so this means that there is a higher probability, let's say 80%, okay, that the price might continue to push down, and we can see a candle, respect the previous low, and the price will continue to push down. Now, let's go to the chart and see, for example, okay, because nothing in trading is 100% guaranteed. Nothing in trading is 100% guaranteed. We are just, doing our expectations. So as you can see here, guys, okay, this candle has opened without a wick, okay, and then the price continued to push down, right? I'm sorry, what's this? Sorry, guys. Okay, now, as you can see here, also, this candle has opened without a wick, started to go up, retraced, and then the price go up again. Another candle opened without a wick, another candle opened without a wick. Here, this candle opened without a wick and the price flip. But as you can see, this candle has opened without a wick, and what happened to the price? Goes higher, right? This candle has opened without a wick and the price started to push down. Okay, this candle has now, what if the candle closed without a wick? This is what we need to learn. Now, if you see the candle closed without a wick, okay, so what does it mean? This means, guys, that the sellers didn't participate in this trade. They didn't participate in this trade. There was no sellers. Okay. So what does it mean? There is a high probability, 50-50 chance that the sellers are going to participate in the next candle. So because they didn't take any chance to participate at the close of the bullish candle, they might take, okay, they might take in the next candle, and we can expect that the price is gonna flip. Okay, the same thing here. If the candle has closed without a wick, okay, so I'm expecting that the buyers did not participate at this selling 15 minutes, 1 hour chart, 1 hour candle, 4 hours. They didn't participate at all. So what happened? I think that there is a high probability chance that the price might flip because the buyers who didn't participate in this 1 hour or 15 minutes or whatsoever, they are going to take the chance on the next candle, right? So let me show you some examples here. So as you can see, now this candle, okay, this candle has closed without a wick, but the price continues to push down. But this candle has closed without a wick. Okay, as you can see, no wick here. What happened to the price? The price flipped to this level. Okay, as you can see here, a candle here closed without a wick. What happened? The price flipped, right? And so on. So guys, is that clear? As you can see here, this candle has closed without a wick, bullish candle, closed without a wick. What happened? The price pushed slightly higher and then the price flipped back again, right? So it's very important to take care of these. Good day. I hope you're doing good. We're good together. Yeah, sure. We are going to get, yes, right? Okay, guys, is that clear? So this can use it as a confirmation, 100%. Yes, we use it as a confirmation. So it's not actually a confirmation, but let me guys tell you one thing. Now, how do I trade by personal trading? Okay, and this is just an, you know, if you don't want to follow this because this is gonna take, some practice from you. So how do I trade, for example, and why it's important for me to understand the type of the wicks or the candles and so on, right? So for example, now, if I want to take a trade, now let me remove this because this now is invalid for me. Okay, what I will do, I'll just draw my support and resistance level. So I can see here on the 30 minutes time frame that there is a support level is being formed here, and there is a resistance level is being formed here, right? So this is what I do. Now, let me take this as a screenshot, okay, and tell you what it is the benefit of understanding or, knowing what are the candlesticks look like, right? So just let me add this screenshot here. So what I want to see in my trade, okay, in order to take a trade, right? I just want to see either a bullish candle close here. Okay, a bullish candle close above the resistance. This gives me one single confirmation that the price might continue to push higher, right? Now, if I saw this candle, but this candle actually has closed without a wick. If this candle, guys, let's assume that now I saw a candle like this, okay? And it actually broke the support level, okay? But this candle was bullish candle and closed without a wick. Now, for me as a trader, I'm going to respect myself. And because I back tested and I saw a lot of candlesticks that closes without wick and the price started to flip, right? So what I will do, I'm not going into the trade, even though the price might continue to push higher. Okay, I prefer to miss this trade Why? I don't want to enter this trade. Why? Because there is a low probability or there is a 50-50 chance that the price might flip to this level. Now, if the price flipped to this level, now here I should wait because if the price actually respected this zone as a support and I started to see another bullish candle forming, so there is a high probability that the price is going to go up. If not, and this level was not, respected, so this was a false breakout. So if the price didn't break higher, so this means that the price is going to go lower. That's it. This is how do I plan my trade. I just visualize the scenarios and I imagine what's going to happen. And then I took my trade based on the candlesticks formation. This is how I actually trade entirely. I don't use indicators. I don't use fair value gaps. I don't use order blocks. I don't use any of these things. Right? Any questions so far? Any question, guys? All good? Yes. All good. So Mahmoudou is trading halal. Okay, I'll answer this. Can you just explain it once more again? Sorry, join so late, please. Okay, sure, that's fine. Okay, so if I want to explain this again, right? Now we said that I do have here a resistance level. Okay, so this is a resistant level, and this is my support level, right? Now, if I want to buy, what should I look at? Okay, so if I want to buy, I would like to see a bullish candle close above this zone. You know why? Because the buyers and the sellers are fighting where? Are fighting in this area. They are not able to break, right? The demand equal the supply, the buying equal the selling. Now, if I see a candle, a bullish candle for buyers who able to break above this zone and close above this zone, what does this mean? This means that there is a high probability that the price is going to what? The price is going to continue push higher. So at that level, I'm going to buy. Now, the idea here is what if the bullish candle that closed above the resistant level, it looks like this. Okay, so there is a wick at the bottom, but there is no wick at the top. What does it mean? This simply means that the sellers did not participate in this candle. So there is a 50-50 chance that the price what? Might flip. Okay, so I'm not going into this trade. Why? I just want to see how the price is going to react after the candle has closed without a wick. If the price continued to push higher, okay, I'm fine with that. I'm gonna respect my rules. Okay, I'm not gonna enter into the trade. Now, if the price flipped back, I want to see how the price is going to react to this zone. Is it going to be respected or not? If the price respected this zone and started to, form some bullish candles, so this means that the price might continue to push higher. If not, then this is a false breakout and the price will continue to push what? To push lower. Is that clear? Okay. So this is 30 minutes candlesticks, guys. Okay. We don't use the 5 minutes or the 1 minute. Okay, this is one thing. What is the reason each time I enter the market, the setup change violently and make me lose position like I was the only on the market? David, this is not, you are not only the one on the market. You, David, you need to learn how to, you should have set of rules. This is number one. Number two, you should stick to your rules. Number three, you should be patient. Okay. And number four, you should be prepared to take a loss. Okay. If you are not accepting the loss, David, because you're still learning, you are in the beginning level. Okay. So if you're not accepting that, this gonna make your trading journey very tough. Okay. This is going to make your trading journey very tough. So please try to, stick to some of your rules or one strategy and follow that strategy. Okay. Just 1 minute, guys. Sorry for that. Okay. So is that clear? All good? Now let's continue. Yeah, definitely we get. So the level should be put in a higher time frame and the confirmation entry point at a lower time frame, 100%. As a beginner, which strategy is good before one create his or her own strategy? Guys, like all the strategies work. All the strategies work. Um, there's a lot of people I know who trade trend lines, a lot of people who trade ICT, there is a lot of people who trade SRC or SMC or whatsoever. Okay. The best thing when it comes to strategy, you have to make it simple. You have to make your strategy simple because, guys, the whole idea about market, the market is a bunch of buyers and sellers. Okay? Buyers and sellers. They fight. Okay? And once they fight, okay, someone will win. You should jump to the winner. That's it, right? So, as you can see here, every time, okay, every time, oh, I'm sorry, every time here, what's happening? Here is a support, here is a resistance, right? The price, the people are fighting here. What happened after that? The price break above. There is a one big bullish candle closed here. Now, what you can see on this candle, this candle actually, okay, has opened what? Without a wick, which means what? Which means very high probability that the price will continue to push higher. What happened? The price continued to push higher, right? And then they started to fight again. Here, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. What happened? The price closed below. Okay, the sellers won, right? On a one single candle. This was a 1 hour candle. Now, definitely, now here is the trick, guys. Now, if you would like to know where should I enter on this big candle, okay, you should go to a lower time frame. Okay, so on the 15-minute time frame, you would find bunch of different candles, okay, making a downtrend. So once a candle closes and the other one respects the previous of this candle, you should enter to your trade, right? So my strategy is very simple: support, resistance, and study the candlesticks. That's it. Nothing more. Okay? If you would like to learn more strategies, then it's fine. Okay? But just remember one thing in your trading, less is more. Remember that. Okay? Because I'm one of the persons who have been losing for 5 years. Just 5 years. Okay? Okay. Now, let's talk about the technical indicators. Right? So the technical indicator, guys, before I'm good enough in demo, but when I entered live, it's a mess. What's happening? This is just a very simple answer for your question. That is the psychology management. And Christina, this is the only thing that is gonna take time from you. Your strategy is fine. Okay, your strategy is fine. Your risk management is fine. The only thing that is gonna make an issue for you, it is your emotions. If you want to see who is responsible about your losses in the market, look at yourself in the mirror. We are guys, we are the only one who are responsible about our losses. Okay? It is 100% with no single doubt. 100%. It is our emotions. Okay? So psychology management is what it takes from the trader to become a successful, consistently profitable trader. It is the psychology management, okay, and the emotions, not the risk management, not the strategy, nothing else. It is just the emotions. Okay. So, Christina, if you have an issue with, the you are doing good in a demo account, but when it comes to real trading, you are feeling that you are lost. This is because you are feeling of fear of missing out, maybe greedy, maybe you are overconfident, a lot of things that comes to your mind. Yeah. Okay. So you might Christina. So Christina is saying I have a FOMO. So Christina might see the price, of the gold is going higher. Okay. Okay. And she missed the trade. So Christina, because she is like having a FOMO, she would enter a trade here, buy. And once this happen, okay, the price start to flip. Definitely, because after a huge, uptrend, there must be a pullback. Okay. Or she might close the trade early, right? There's a lot of things that you need to master before you actually the trading becomes worthy for you. So I have a question. Good day. How I will get the recording? The recording is going to be shared with you guys on the email. They will share with you it. Okay. So type it will be shared on the email, I believe. Okay. Now, in the indicators, okay, never, ever, never, ever. Okay, guys. So Florenzo, Christina, everyone here, guys, if you are having a profit on a demo and you're losing and you're losing on the live account, this is simply because of the psychology. That's it. Okay, it's not the market. The market is nothing. Nothing has changed in the market. The amount of the money has not changed. Nothing has changed. Everything is the same. The only thing that has changed is how you feel about real money. Okay, so this is the only thing. Believe me, this is the only thing that will take time from you to succeed in trading. The only thing. If you could master it, believe me, you are going to be a profitable trader. 100% with no single doubt, right? Now, okay, for the technical indicators, guys, for the technical indicators, we have two type of technical indicators that usually we commonly use it in the trading, which is something called the moving averages. Okay, so we have the moving averages and we have the RSI, right? So what is the moving average? So let me jump to for example, real chart here. So as you can see here, guys, just a quick example. Okay, I can see here a candle has break the resistance level that I have just drawn. So if I go to the 15 minutes chart, okay, what I want to see, okay, I want to see this candle respects the high of this candle, okay, and once this candle flip, okay, I will just wait for the retrace, okay, and once this candle flips into green, I should buy. Okay. So for example, don't take a trade okay with me because this is just gonna be, a trial. Okay. But here's one thing. If the price breaks above this level and continue to push higher, okay, it's going to reach to 4939. It might and it might not. So I'm going to take my position here. I just open zero point 0.5, for example. Okay. And definitely, immediately, I'm going to put my stop loss, okay, below this candle, right? Because if this low has been broken, this means what? That the uptrend is invalid, right? And then I'll just keep it here and that's it. Okay, so we will continue our session and then let's see what happened to this trade. Okay. All right. Trade with emotion is a loss. Taking a lot of time. I agree with you. It took everyone a lot of time, right? So yes, guys. So here, once we need to see, yes. So the moving averages here, it is a way to, understand the trend of the market. So for example, okay, I have the moving average 200. So the moving average 200, you can definitely add it from the indicator and you can go for the inputs and to choose the lens. So this is showing you the overall trend in a period of 200 candles, right? So what you can see that the price is going higher, right? Yes, definitely. If your strategy it's not good, then definitely you will always be under pressure, right? Number two, SMA 50. So this is for a shorter period of time, for 50 candles, and the 20 is even shorter. So what you can see here, guys, is that, okay, if the price is rejecting from the 20 or 50 moving average, this represents a continuation in the market. This represents in the continuation in the market. But once the price or the candles became below the 20 and 50 moving average, what happened? The price, okay, goes down until it rejected from the 200. Now, if the price, okay, pushed down, okay, below the 200, which means a continuation for what? For a downtrend. Okay, so this is how we use the moving averages. So the moving average can be used for, as you can see, identifying the trend, okay, and also a continuation for the trend or a reversal. As you can see, every time that the price or the moving average 20 and 50, they cross with each other, okay, they continue to push higher. And if the 20 moving average crossed from the above the 50 moving average, the price will push lower. Okay, this is one thing about the moving averages. Usually, I don't use moving averages, okay, because it's always lagging indicators. It is always lagging indicators. So, what I can learn from here is that as you can see here, this is the 50 moving average in the red line, and this is the blue, right? What's happening? The price is rejecting the 20 and 50. Okay. Now are the candles above or below the moving averages? The candles are below the moving averages, which gives me, a high probability chance that the price will continue to push lower, lower, and lower. But if the price is going to push lower, then the price might reject from the 200 moving average, which is the green line, right? All of them are the same thing. All of them are the same thing. Moving average, simple moving average, exponential moving average, it's the same thing. It's just a matter of calculation, but it will give you the same result. Which time frame should we make use of the moving average? Any time frame. Okay, but if you are using, if you are a swing trader or long time trader, so you should using the 50 and 200. If you are a short time trader, okay, just use the 20 and 50. Okay, let's say if you're just doing the analysis on 30 and executing on 15-minute or 5-minute, you can use the 20 and 50. Okay, so in the 15 minutes, I suggest 20 and 50 simple moving average. Right? Okay. Let's see what happened. As you can see, guys, this is the simplicity of trading. The price continued to push higher, right? Now, the price might reject, might flip. Okay. So what should I do in this case? Okay. I don't want to lose my money. So what at that time point, we should learn something called the risk management. So what I will do, I'll just open this. Okay. I'll close 50% of my position. Okay. I'll close 50%. Okay. 0.25. I'll close it. I booked my profit. I move my stop loss here. Okay, so I don't lose anything. Now I control my emotions. Keep it running. Let it run. Let it run. But this is just a proof of how simple my strategy is. Support resistance, break above, candle to flip, enter. That's it. Very simple, right? Do you guys want to learn this strategy? I move the stop loss. Okay, do you guys want to learn this strategy? Easy one, right? Now, as a every time I'm telling you this, guys, so buy, wow, wow. Okay, to go out of the position. Okay, at that time, okay, I might say, thank you so much, the market. I will close. I don't need more than this. I made a profit. That's it. Thank you so much. Okay, now we are going to launch PU Prime Academy. Okay, in this Pay Prime Academy, I have personally created all the courses needed from the beginner level to advanced level. And I have ensured that in the first stage, I'm teaching this strategy with the candlesticks, with everything in deep details. Okay, so this is going to be launched by next month. Okay, the traders community, and definitely everyone who is a client with Pure Prime, you would be able to see and check these courses, right? So this is how I can be a successful trader because my strategy is very simple, is very clear. Two rules. I just need two rules. That's it. I control my emotions. Once the market give me a profit, I closed 50% of my position. I took my profit. I moved my stop loss. If it's going to go even to the 6,000, just keep it to go, for the 6,000. Okay. So this is how you can be a successful trader. Just make everything simple. Now, the last thing before we conclude our session, it is the Fibonacci retracement. Okay, so Fibonacci is one of the tools that I use it, okay, when I am doing an analysis, not when executing the market. Now, how the Fibonacci retracement works? The Fibonacci is a mathematician who figured out these percentages, and we figured out that these percentages actually works on everything on the life. So we decided to use it on trading. So for example, how we can use Fibonacci. So if you can see if the price is continuing like actually going very high. Okay, so Fibonacci, guys, does not work on a sideway. Either it works on a downtrend or it works in an uptrend because I told you in an uptrend, the price goes up, and then there is a slight pullback, and then the price continue to push higher, right? Now, this pullback level, it is going to be one of the percentages of Fibonacci. So the price, okay, will never ever gonna continue to push higher like this. The price will go down to one of these levels. It might go to this level. It might go to the 38% level or the golden zone, which is 61.8%. These are the most important three Fibonacci percentages, okay? At that level, if the price reached here, with understanding the candlesticks formation, I would expect that the price will continue from that level to push higher and continue up, right? Okay, so how do we apply the Fibonacci? Okay, so for example, here, let me just remove all of these stuffs. Okay, let me go to the gold here on a 30 minutes time frame. Now, as you can see, okay, the price is making low, lower low, lower low, lower low, and so on, right? So if I took from the high level to the low level here, what you can see, the price reached to the 61.8 and then pull back. 61, pull back. And then it reached to the 38 and then it pulled back to 61. And then it comes to the 14 and then it pulled back again to 50. Okay, now the price is in the level of 50. So the 50 is a very important zone for me. Now, I can do something which is vice versa. I can apply the Fibonacci from this level, okay, to this level, from the lowest point to the highest point, right? So the price goes up, 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 and then it reached to this and then started to retrace. Now, if I started to apply Fibonacci, as you can see, it has exactly retraced from the level of 38%. And then it is going to continue to push higher, right? After that, it might goes again to test the 23% or 38 and then goes up again. So applying Fibonacci level, guys, if you would like to take my, my Fibonacci tools, okay, because if you're drawing exactly on the trade view, okay, they have different settings. You can, guys, just take a screenshot or take a picture with using your phone, or once you are gonna watch the record again, okay, just do these settings. Okay, these are the best settings. You should enter a trade or expect to enter a trade at these levels: 61%, 50, 38%, right? And definitely with the studying. Is this recorded? Can you share? Yeah, it's going to be shared, right? So as you can see, the gold is massively going up. Now, if I just kept my trade, it even broke what? Okay, so I closed my trade very early, right? And because I'm in webinar. Now, can see here, guys, can you see one thing here? This candle, okay, this candle, which is now being formed, has opened without a wick, right? Has opened without a wick, okay? Which means very high buying pressure, very high buying pressure. So as you can see, there's this resistant level. This resistant level again has been broken, okay? And then a candle open without a wick might continue to push further higher and higher and higher. Okay, guys. Paul has a question. Yes, Paul, please ask me. I'm done, guys, with the session, with the webinar. So if you guys have any question, please let me know. Guys, any questions? Without a wick is not everywhere the same. This FIPO level is for gold, is for everything, Christina. Everything, everything. It's for trends. Without wick is not everywhere the same. Yes, okay, definitely. It's not everywhere the same. Thank you very much. Difficult to identify support and resistance. So this is very good question. Now, if you would like to identify support and resistance level, okay, what you can do simply is that you go for a long time frame, okay, as you can see here. So what you need to care about is the recent support and resistance level. So this is what's happening on the gold at the moment, right? Now, support is just a zone here. So as you can see here, there is a zone here. And then the price started to reach to this level, pull back, and then this level has been broken. Now, I am expecting to reach to this level, right? Because the price is going, we can see here some rejections happening, right? So this is how you define the support and resistance level. So if we successfully completed the break of this, we are going to push to this level. And if we break above this level, we are going to push to this level and so on. Okay. Now, when will we receive your pattern of trading? It is going to be launched on Pure Prime website. We are going to then launch something called Trading Community. okay, where we are going to speak, guys, together. I'm going to teach you the strategy. I'm going to take live trading with you and so on. How take 50% on MT5 and MT4. So that's easy. You just, all what you got to do is once you, let me just open 0.01. Okay, you just have open the position. So you just double click here and then you change here the lot size. Okay, so if it's 0.02, then 0.01, and then you close it. So for example, again, sorry, let me just close this trade. Okay, so let me just open a trade for you. Let's say 0.02. Okay, and I clicked buy. Now the position is opened, right? The position now is opened. Okay. Now, if I want to close this position, what I will do, or 50%, I'll just make this one. So if you close this to one, as you can see here, I can close only 0.01. And the remaining is going to run, right? This is how you close 50% of your position. Okay. Definitely, guys, we are going to meet. Great. Rachel, thank you so much. Will there be an announcement on the Training Academy launch date? Not yet. We are in the process of recording the videos and making the sessions. So not yet, actually. My pleasure. Thank you so much, guys. Thank you so much. Thank you. Have a lovely day. Have a lovely day, everyone. Mahmouda, yes. So when it comes to saying that trading is halal or not, okay, I am not one who can give you the best answer, but according to Islamic finance, okay, there is a lot of, things that is applied on the digital economy nowadays and the modern financial economy that is applied everywhere else. So one of the most important rules when it comes to Islam is that, you cannot do short selling. Where we in CFDs, we do the short selling, right? But short selling is part of or something that is related to the modern economy. So now, the market is not only working as buy and hold, right? If people are doing this, then even the banks and the hedge funds and even Islamic banks, they do short selling, right? So this is number one. Number two, regarding the holding of the physical assets. In CFDs, we don't hold the physical asset. We just speculate in the price. In Islam, you must own the physical assets. But now, who is owning a physical asset when it comes to trading even stocks? You are not even holding a physical asset, right? So this is also one another thing of the people having some, they don't have 100% agreement, right? Regarding the leverage, leverage is something that is, I would say, it is not an interest loan or loan based on interest. It is something that is a tool that would help you to magnify your profit. At the same time, it's going to magnify your losses. So when you know how to use the leverage, okay, and you are not paying any interest on this leverage and you are not keeping your positions held over the weekend and you don't have a swap fee, then why it's haram? Okay, because what we are doing, guys, it's not a speculation. We are not gambling. Okay, so Mahmoud, if you are just telling me that we are gambling, we are not gambling. This is a science. This is non-technical analysis. It's the same as fundamental analysis. This is a science, a well-recognized science. We are not speculating. We are not enter into a trade without a knowledge. I'm not just saying, okay, I guess it's gonna go up. No, in front of you, I just give you an explanation based on economic perspective, demand and supply. There was a fight between the buyers and the sellers, and now the buyers are in control. So I just went with them, right? So this is something that this is my answer, Mahmoud. But definitely, you should ask someone who is more specialized and give you the final answer, just to be clear. Thank you so much, Mahmoud. Can we get this? You definitely will go. If you have Telegram group, can you send the link, please? Telegram group. Right. I don't have Telegram group for me. We have as a PU Prime, we have Telegram group here. So this is our PU Prime official Telegram channel. Um, this is the link. Okay. So I have another question. Um, do you trade when the market open? I don't trade unless the market is open. Okay. Is the Academy free of charge? Part of it is a free, yes, but you should have an account with us. Um, Until thank you. Okay, so there are specific times that I do take my trade, something like this time because there is a volume. It's a pre-New York session where the large institutions open their positions. And when the market opens, definitely there's a high volume. So what I want, I just need one candle. I just need one candle, one session, one asset class to trade, one strategy. Supports, resistance. If the price breaks, I enter, I take one candle, and that's it. We are going to learn this on the later sessions, how we can, I would say, make a confirmation on a 30 minutes and 15 minutes time frame, right? Because if you can see here, okay, we can do a confirmation, but this is to explain it is going to be very, it's going to take a lot of time, right? But Fibonacci works here, guys. So as you can see, pull 38%, and then the price sky to the rocket. So Fibonacci works if you applied it correctly with the candlesticks and the price action. One candle on what time frame? 15 minutes. How to enter and into a continuation, a trend. Once the price pull back, okay, to any of these levels, okay, as you can see here, the price started to continue low, a higher low. So I'm expecting a price to pull back. With this pullback, I'm going to take my trade. This is trend continuation. Can we get the copy of this training session? Of course you will get. Okay, guys, that's all from my side. Thank you so much and have a lovely day.